Okay. So it's my pleasure and an honor for me to welcome all of you here on behalf of the University of Vienna. And I'm sure today we are not going to have some inspiring keynotes, especially from Oliver. I don't know so much about my own. I don't want to, talk so positively about myself, but I'm going to do my best to keep it interesting and also informative. And of course, we are confronted with a problem here. ARTs under the MiCA regime, which shows that we have a structural problem here. It's a problem in the field of EU regulation, which confronts us with problems connected especially to the rule of law. And that's what we are going to talk about today. But of course, we will also have some insights to the definitions and the practical problems that are connected with trying to create a new business model on the fields of crypto assets, especially ARTs. Okay, so that were my 2 cents, and I'm gonna hand over to Oliver. He has his own mic, perfect. Mm-hmm. Okay. And Oliver is gonna explain to us right now how you can distinguish between financial assets, financial products, and ARTs. Oliver, the stage is yours.
Thank you very much. In preparing for this talk, I decided to rename it a little bit. So instead of telling you how to distinguish between financial instruments and asset reference tokens, what I would like to do is speak about classification and then talk about current uncertainty, because even though I might have a clear picture of how to distinguish arts versus financial instruments, it doesn't really help much if the regulators don't concur with my assessment. So, right. A regime without much precedent is the heading of this slide. What do I mean by that? If you look at, when MiCA came into force, the parts that cover asset reference tokens and e-money tokens were the first one to enter into force, and that was back in 2024, in June of 2024. And so that's almost 2 years now. We have a handful of e-money tokens and e-money token issuers who have obtained a license, but I checked again today before this talk, there's still not a single licensed asset reference token issuer in the Union after 2 years. What you also see on the slide is that there was consultation on between ESMA and EBA and the Commission, a consultation process to issue RTS and ITS and opinions and guidelines, and we have a couple of them. So in particular, one that's really important, we're going to talk about this a little bit more, that should give guidance as to how to distinguish asset reference tokens from any other sort of regulated product. But still, as of today, not a single licensed issuer. And we do have 2 projects also today who are going to sit on the panel and to maybe able to give some of their experiences. Yeah, so a regime without much precedent, what I mean by that is, although it's in force since 2024, we don't see licensed issuers yet. So what is an asset reference token? We have a legal definition in MiCA, and it states that an asset reference token is a crypto asset, so you have to read into that all of the definition of what a crypto asset constitutes. It's a crypto asset that purports to maintain a stable value in relation to another value or right. So it's basically a token that is linked to the value of something else. So you could imagine a token that maintains its stable value to gold or to shares in an ETF or in a company. That's the idea. And definition-wise, it's basically, it's very broad, So as soon as you claim that your token maintains stability with any asset or right, you fall under this definition. Regardless of whether there's an actual mechanism in place that makes sure that this link to another asset is actually maintained. So merely claiming leads to the application of MiCA. Which also opens up another question, namely so first of all, what is the case if I issue simply paper that purports to maintain a stable value in relation to some asset? Because those are not covered. MiCA really regulates technology here, whether by mistake or on purpose, I can't tell. But it opens up multiple classification questions. And why is that even an issue, or what is the issue precisely? This slide is headed with the perimeter problem, MiCA is residual. And what I mean by that is we have one specific article, namely Article 2, Section 4, that states this whole regulation, MiCA, only applies if not your crypto asset if your crypto asset doesn't fall under any other existing financial market regulation. So your crypto asset cannot qualify as a financial instrument, it cannot qualify as deposits, it cannot qualify as funds or as securitization positions or insurance, and then a couple of other things that are really not that relevant. So in order to even make MiCA applicable to your token, you first have to make sure it doesn't fall under MiFID, for example. And that's the most important part. It doesn't fall under MiFID. So it doesn't make much sense to discuss the elements of our definition of asset reference token alone, because if you fall under the financial instruments definition, you don't even get to this level of analysis. You have to look at the definition read in conjunction with all the other definitions, most importantly the financial instrument under MiFID II. That's why MiCA is residual. Right, but how now could you distinguish asset reference tokens from financial instruments? If you look at it from an economic point of view, you have an instrument that maintains a stable value to something else, to another, could be a financial instrument, or could be gold, or could be whatever. There's definitely mechanisms to structure it as a financial instrument. You could think of forwards or futures that you structure in a way so that they always maintain the value in relation to specific underlying. So there's definitely ways to structure something as a financial instrument. But there needs to be some way to structure it differently, because otherwise we would have to assume that the European legislator passed an act that actually has no room for application. And I mean, Christian, as a constitutional law professor, can attest to that, but there's something of a saying or a rule that you cannot actually claim a legislator passing a law that has no application. So there must be some room for asset reference token in our legal system. And we do have guidelines, we do have opinions. So soft law, or non-binding expressions of ESMA's intent. And I have excerpted a small part, recital 50, of this particular ESMA guideline here. And since it's so important, I would like to read it out to you. It reads, national competent authorities, that's FMA and the others, and financial market participants, that's all us, should also consider that when the value of a token is established through reserved assets, the token should be considered an asset reference token. Okay, this basically means MiCA obligates an asset reference token issuer to maintain a reserve of assets, and if your value link to these assets is established through such a reserve of assets, then it should be considered an asset reference token. Okay, thank you. But then it goes on. On the contrary, when the value or performance of the token is established through synthetically referencing other assets or rights or a combination thereof, national competent authorities, and you don't see this here, should consider this as financial instruments. So what it boils down to is, on the one hand, having a reserve of assets versus synthetically replicating a value. So, and what does synthetically replicating a value mean? You could think of a piece of paper that states, whoever hands this piece of paper to me, I will pay the equivalent of 1 Apple share. I don't own an Apple share. I don't need to own an Apple share for this commitment to be enforceable and legally binding. But this is what's meant by synthetically replicating. You don't actually own the underlying, or you're not really necessarily hedged against the underlying obligation, versus I have a reserve of assets. So for example, I already own all the Apple stock that I'm linking with my pieces of paper, which would fall under the latter category of actually having a reserve of assets, allowing people a claim against me, and I'm not just synthetically replicating that, but I actually have my reserve of assets. That's what ESMA says. So how can you, I mean, perhaps one more thing to consider here on this slide. That's what ESMA says. Unfortunately, we have two legal mechanisms here in place. On the one hand, we have MiFID, which is a directive and which needs to be implemented into national laws. So the national courts and authorities basically decide on what a financial instrument is at the end of the day. So there's multiple interpretations across the EU. And then we have MiCA, which is a regulation, which is applicable independently of any implementation act in the member states. And now we have the system or the situation where potentially multiple definitions of financial instruments need to be aligned with the definition of a crypto asset or an asset reference token that's only dealt with by one EU regulation. Doesn't really help. And from what I've heard regarding discussions on ESMA level, they cannot really find a common ground. And even though we have an opinion, and even though there are projects who try to get through the finish line, it seems as there's still some uncertainty even within ESMA, so the competent regulator for defining what financial instruments are. It's not so much about defining what asset reference tokens are. We are still at the stage of figuring out where the loophole is to fall through the financial instrument definition to even get to MiCA. All right, but now let's assume we have a good understanding of what the asset reference tokens are. Let's assume we want to stay on the safe side and be as prudent as possible. What are some guardrails? What can you do to make sure you come as close to obtaining your ARS license as possible? So first of all, no securities rights. When you draft your terms, at the end of the day, it's still a contractual relationship between an issuer of an asset reference token and the subscriber. And then, if it's traded, then between the issuer and everybody else who holds these tokens. So you have some sort of a legal agreement between the issuer and everybody who holds the tokens. So you need some sort of terms and conditions. In the securities world, we would call them securities terms, and here we would call them token terms. So make sure that you don't imply securities rights. No ownership, no dividends, no voting rights, no liquidation proceeds, it should be, no creditor claims to principal or interest. Be neutral, just link your token to a specific referenced asset. Don't use derivative language. So when you draft your terms, perhaps don't use a derivative product as the starting point. Getting rid of all that, is just headache. Make sure there is no fund economics. You do not have a pool return, not an investment policy or discretionary management to the benefit of your subscribers. Make sure that there's controls on the reserve in place, so full coverage, 100% plus as it's now required, liquidity management, custody rules, rules on auditing, disclosures, redemption processes that are defined. And make sure you are MiCA compliant also in any other respects, basically, when you're intending to offer that. I mean, that's one side. So there's people who would like to issue asset reference tokens and who might face the challenge that this is qualified as financial instruments. But then there's actually a flip side to that. Because you might want to issue a token that's used for a very specific purpose, namely just indicating when ownership over specific assets is transferred. So you could imagine, I am the custodian of this pen I'm holding here. I'm issuing pieces of paper, and then we agree that once you pass this piece of paper to somebody else, and you notify me about that, so I have to be aware of it, I will then regard this as a transfer of title, as an assignment of the claim. And this is perfectly legal in terms of civil law mechanics. You can do that, and you can replace the piece of paper with a blockchain-based token. So you could say the gold is in reserve somewhere, ownership should be transferred whenever a token is transferred on the blockchain, and this is also the notification of this transfer of title to the custodian, which in and of itself has nothing to do with an asset reference token. You're not claiming that your token maintains a stable value, but at the end of the day, if you were to put such a token on an exchange, likely it would trade at about the value that the reference asset has, even if you're not claiming it. So we have really two problems. On the one side, we have people who would like to issue asset reference tokens, whose project may be regarded as financial instruments. And then on the other hand, we have people who want to issue tokens which are definitely not asset reference tokens, but in their effects may be also regarded as such. And this is my slide on it. So what can you do to make sure you stay out of regulation? And I think the most important part is don't make a promise of stable returns. As soon as you claim somewhere in your marketing materials, on your website or elsewhere, that this token will maintain a stable value in relation to some other asset, you are caught. You're certainly being regarded as an asset reference token. Don't have reserve mechanics in place as MiCA promotes them. Don't have a redemption of the asset value. Maybe you can work with a repurchase of the reference. You cannot use the word referenced asset. Maybe you can work with repurchase obligations or such, but just strictly differentiated from everything MiCA requires you from an asset reference tokens. Perhaps use a voucher logic. Just have something that can be redeemed for a product that's available in a store, because then at the end of the day, it's either, it's more considered to be a utility token or what we would call a voucher token. But there's always uncertainties, and even small, misnomers or unclear descriptions, even in the public marketing materials, can be really detrimental. So really make sure to check what information you're putting out. This is just information for you to follow up. If you'd like to have something to read before going to bed, it's really helpful to fall asleep soon. And that's my quick intro on asset reference tokens. And if you would like to stay in touch, you can scan this QR code. There's all my contact information. And thank you very much.